Okay, hi. Welcome. Good morning, everybody. 9 a.m. Singapore time. I'm Richard Bonugli, the CEO Director for Cedar Gold, and we'd like to launch a series of webinars that describe more about our investment strategy. So it's a focus on the investment strategy, the investment approach, and we hope to also do more of these that will focus on specific items of the strategy, specific aspects, and I'll get into that more later. So we have a number of things we'd like to cover today. We'll try to keep these to about 20 minutes, and they'll be broadcast via YouTube. We also have the ability to do more private discussions within our Zoom session as well at any time if you like for following up on these webinars. So yeah, just to begin with, what we have is a website that we've created called Cedar Portfolio, which is a focus on the portfolio. Our firm has been around since 2010. We have representatives, offices, and teams in different parts of the world, Europe, North America, US, Canada, South America, Asia Pacific region. And we have been doing management consulting. We have our first and foremost management consulting services firm. And this initiative that we have is a focus on an investment asset portfolio, which we think makes sense. What it does is focuses on society and the environment, but also we have a target of outperforming portfolio returns at the same time. So it's a dual mandate approach. Actively managed portfolio, ESG, and it's essentially great businesses from around the world that we have identified through our qualification process for helping society and the environment. We think this approach actually has much better leverage and impact on the economy. So it's essentially the great businesses as part of the economy that are helping society and the environment. So it complements the nonprofit world, charities that are set up, nonprofit organizations in the space for helping society and the environment. We think it has superior characteristics because ESG stands for environment, social governance, and businesses are evaluated on each of these factors. And especially the governance factor is critical here because typically on nonprofit organizations or charities, they may not be evaluated on the G, on the governance. We've all heard stories where a significant amount of the revenue goes to paying C-level executive salaries and compensation versus the actual mandate of and the focus of the nonprofit or charity. So we think it's much more powerful because these are great businesses that we have identified that have an impact on society and the environment. And we emphasize also there's an integrated approach to ESG, socially responsible, and impact investing, all three. So we integrate all three. So we look at ESG factors, we look at socially responsible investing. What that means is doing positive screening and negative screening on the types of businesses we'd like to have in the portfolio that makes sense from our qualification criteria. Impact investing is another aspect. So we look at the businesses to ensure that they are doing impact investments. These are projects or initiatives that are done by the business for particular goals. And we have some examples we can show later. Just to give a highlight of our management team, we have Ira Harris, he's a research strategist. Overall, we've got a number of other management resources in terms of focus on ESG, sustainability. We also have advisors in different countries. Alejandro represents us from South America. And we also have Soren Norby for Europe and Uli Korch for the US. This is a bit on my background. Come from a risk management background. I have designation as professional risk manager in financial risk and operational risk. I've done derivatives trading on all asset classes. And I've set up this firm, this initiative, as a platform for helping the environment. We like to call it a platform because we think it has a larger meaning than just making money. We have a number of social media channels and outlets. For example, we do a podcast program where we interview some of the best fund managers and economists from around the world. So this is quite interesting from our perspective, because it also allows us to talk within the industry, see where people see trends. Maybe there's some trends that are unknown to us, so we're always in a learning mode. So through these podcasts, we can bring that value to the table. And just to let you know, our podcast program is the Financial Repression Authority. Sounds a bit ominous, no conspiracy theory here. What it means is the type of approach that especially governments and central banks have been taking within the last 20, 30 years to address unsustainable government debt and unfunded liabilities. So these are actions, policies that governments take on, and the actual adverse risks that result from these good intentioned macro-prudential central bank and government policies and regulations result in adverse risks. So we look at that adverse risk to investors and funds. So that gives us our perspective. And this has been going on for quite some time. Obviously, the repression of interest rates has been one tool, and more recently, the idea of revving up inflation at much higher levels than we have currently seen historically. In terms of the math, if you do the math, 4% inflation for 10 years essentially reduces the burden of debt by 1/2, if you work out the math. So any higher levels of inflation can be obtained. The goals can be obtained in a shorter period of time. So yeah, this is our website that we have. We post our podcast there, and you can go on YouTube to watch them. We've done a number of them. Most recently, Daniel Lacalle, he's a Spanish economist that we did an interview just within the last week. Also, Martin Barnes used to work for a bank credit analyst. Dr. Barbara Kolm is the VP of the Central Bank of Austria. Dr. Thorsten Polleit has been a fund manager, economist. And the approach that we take is based on using the principles of the Austrian School of Economics. So this is a unique school of detail on other webinars, but essentially it's a value investing based approach based on the principles of that school of thought, a unique school of thought. This unique school of thought was developed initially in the 1870s in Vienna, Austria, and the principles emphasize enduring businesses, like long-lasting businesses with high positive free cash flows, and manageable debt. That's a key. So it's either no debt or low debt, and this reflects in our portfolio. We look for businesses with little or no debt or manageable debt. And also there are elements as part of the principles of the Austrian School of Economics of innovation, entrepreneurialism, and stores of value. So scarcity of capital, if you will, scarcity of services. So overall, we think this provides a powerful advantage in an era that's beset with excessive debt and leverage. You know, where we're at today, lots of challenges with debt and leverage. As you know, the bond market's having significant challenges. So that's our approach. I'll get into that a bit more later. We mentioned the three-tiered approach to ESG, socially responsible and impact investing. And importantly also, we are a signatory to the United Nations Principles for Responsible Investment. So this provides a structure, systematic approach within our qualification criteria and analysis. We look at, we incorporate the 17 UN Sustainable Development Goals, which map to 169 target initiatives. These are noble goals. So we look to that, and importantly, we take an approach that's very different from other approaches in the industry. You've heard of agenda-based environmentalism, such as the World Economic Forum, Great Reset. That's an agenda-based approach. We take an approach that's called the market environmentalism. So this is a unique called market environmentalism. There's 4 principles. This link is given on our website as well. You can actually become a signatory to this approach to environmentalism. And it essentially emphasizes the market economy, the free market, also private property rights, decentralized solutions, decentralized approaches that are much better, more efficient. If you think of the days of the Soviet Union where everything was centralized and all the damage they did to the environment, lakes drying up, radiation in the countryside, people that are local and to the where the problems are, the challenges, are more knowledgeable, more aware of what the challenges are, and have a better concept, a better idea for coming up with solutions. We emphasize this number 4, optimism and innovation. So this is about using technology solutions rather than processes that may involve humans to behave in a way they may not want to behave. You know, so instead of going against human nature, we are aligned with human nature, and this is aligned with the principles of the Austrian School of Economics. This market environmentalism is actually a joint initiative between the American Conservation Coalition and the Austrian Economic Center out of Vienna, Austria. So it actually stems from the Austrian School of Economics thought. So yeah, so just coming back, we have this slide deck that's also obtainable on our website. It talks about the portfolio, the characteristics. So it's only equities of great businesses from around the world. We currently have 47 businesses in the portfolio. We don't use any derivatives in the investment process or in the portfolio. There's no use of debt or leverage. And we're looking for businesses with great ESG metrics that are screened for the social responsibility investing I mentioned, positive screening, negative screening, and that businesses that apply impact investing as part of their business model or as specific projects. We also, to note, we have a weighting of physical gold, 5% and 5% weighting on physical silver in the portfolio at all times. We do portfolio rebalancing quarterly if things get out of balance from that. So every quarter we do balancing, and this applies to all the equities in the portfolio. Some examples of the holdings in the portfolio, and also impact investing examples, as we mentioned, the third aspect we look for is businesses that do impact investments. So these are currently in our portfolio, these businesses, and they're from different parts of the world, internationally. Most of the businesses in our portfolio are large or mid-cap, mostly in developed markets, although not necessarily. And we just apply our qualification criteria, which is essentially this. We look for the businesses in the portfolio. We identify of the universe of potential equities out there. We do a qualification process that analyzes the businesses on 14 factors. 7 are quantitative and 7 are qualitative. So just to give an idea of the edge that we have on the quantitative side for outperformance relative to the equity markets, the 7 factors that we have identified that are based on the principles of the Austrian school have studies that indicate positive correlation to equity outperformance. So each one of those factors. And so if you think of a business that meets all 7 of those factors, the probability and statistics, there's a much higher edge than just one factor alone, right? If you require all 7 to be met at the same time, that's a much higher probability and statistically higher probability for equity outperformance. So that's some insight into the power on our approach. And also we look at the qualitative factors, of course, ESG factors, impact investing. There's some other slides here that discuss what those factors are. And again, in another webinar, we'll go into these in more detail. These are the 7 quantitative factors and the 7 qualitative factors. It's very interesting on our performance. If you compare our portfolio to some of the biggest ESG ETF funds in the world, such as SUSA ETF, which has over 4 billion assets under management, combining both actual performance results and backtesting results going back to 2005, when that ETF fund was created, we have a much better story. So it's multiple times outperformance. And we've done comparisons to other benchmarks, industry indices. We've also looked at the parameters for risk, so standard deviation, Sharpe ratio, Sortino ratio, and we note that the Cedar portfolio, our portfolio, generally has been outperforming portfolio returns, but also at lower risk. So that's exactly what you'd like to see, a lower risk approach, but higher returns at the same time. And even currently, our volatility standard deviation is still less than the S&P. So on a long-term basis. So yeah, we have also even 2022, we've been outperforming the indices by between 600 basis points to 1,200 basis points throughout this year. There's some other slides that speak to how we approach ESG and sustainability. So this is very powerful too, because this last point is an active ownership approach with the businesses. So we reach out to the businesses, offer either free consulting, advisory services, or paid engagements, depending on the nature and extent, the scope. But this essentially helps the businesses to excel, to be better at what they do, better ESG factors, better business model. So we leverage our consulting background for the betterment of the businesses in the portfolio. These are some studies that support our ESG approach. There's several slides, several studies. You can listen to that. And we also have this slide that shows how we assess the ESG factors and the other socially responsible investment, positive screening, negative screening. And there's this aspect as well. So this is this is on the portfolio. We actually do calculations using the Swiss Sustainable Finance Method, SSF, to measure the portfolio carbon footprint, carbon intensity, weighted average carbon intensity, those metrics. And so the idea is we're also aligning the portfolio towards some of the same type of goals that you hear in the industry in terms of carbon net neutral or carbon zero, by 2030, by 2050, those targets. So yeah, this is just an introduction overall in terms of our approach. As mentioned, we are a signatory of the UN Principles for Responsible Investment. This is not part of the UN, but a mandate, an initiative that helps to structure ESG investing. So we do reporting into this. And the other aspect, as well as the UN 17 SDGs, we have links to all this that appear in the website. So yeah, all the resources are on the website here. There's also a little video you can listen to. We have an index fact sheet and link to actual performance results that Beta is our independent third-party agent that does our calculation for our NAV. So you can link to that to take a look. You can also link to more information on our investing approach. We also offer this trading service that's completely separate from the portfolio. So yeah, take a look at this. We do have an expression of interest to get an idea on the investment strategy, what type of interest there is from members of the audience today. So we'll provide this link in an email distribution out and also on our website. So we're in the process of working with a number of partners that would look to considering offering what the fund that most investors want. Like, is there a preference for an ETF? Is there a preference for an exchange traded product, like an actively managed certificate listed on the Swiss Stock Exchange? Is that the way investors are interested in? There's also the idea of a digital security token on the blockchain. So lots going on there in Singapore with InvestaX and the Monetary Authority of Singapore for helping to facilitate that. And then there's the Singapore Variable Capital Company, VCC subfund, as an avenue also. So yeah, feel free to fill this out, to get in touch with us at any time. Happy to answer any questions. And as mentioned, this is the first of many webinars. We'll be focusing in on some of the aspects in more detail in the coming weeks.